Folks, this live stream is brought to you by my sponsor AAA FX. Now, they're a fully regulated broker in Europe and South Africa, offering Forex indices, commodities, crypto, and over 100 stocks. Now, at AAA FX, you pay no commission on any Forex pair using their ECN Plus account and low commissions on cryptos and stocks. Plus, you can deposit with cash or crypto, get a free VPS with deposits over 5K, and easily integrate the well-known copy trade service Zulu Trade. While you're waiting for the stream to start, go and check them out by clicking the link in the description, comments, or visit AAAFX.com.
Good morning, everyone.
Morning. Happy Wednesday.
Yeah, happy Wednesday to you all. As always, drop in the chat where you guys are from. Love to see where everyone is from around the world. Drop some pairs you guys are looking at. I'm going to be going over quite a bit. There is a lot to discuss today. So make sure to take some good notes today. We have a lot of good setups for you.
New York, South Africa.
I'll plug my mic in real quick for you so you guys can hear me better. There we go.
Buy gold. Oh, you guys crack me up.
New York City, South Africa, Germany, Portugal. Good morning, guys. Thanks for tuning in.
That's right, no gold here.
We'll give it just a few more minutes to let people trickle on in. What other pairs you guys are looking at this morning? I know you guys are looking at something.
Markets are pretty ugly, to be honest. Guys, potentially seeing some higher time frame shifts, liquidations, US 39. That's a new one.
Oh. See, GJ. Yep, I'll be discussing GJ. I have a pretty good setup on that this morning. I'm assuming some of you guys are new here. I don't trade anything but Forex, so please don't ask me to go over gold or US 30 or NASDAQ or anything. I don't like those pairs or those indices and commodities. CJ, yeah, we'll talk about CJ today. A lot of setups from last Saturday's live session already playing out. Just goes to show, like I say every week, be sure to tune in to these live sessions every Wednesday and Saturday. It's free money, guys. I give out these setups all day, every day. You do not want to miss out.
I don't know. We need your... Never mind. I'm not going to say that. I'm not going to read out that whole sentence.
I don't think you guys could see the comment section.
Oh, can they not?
On the live session? No, I don't think so.
Oh, I thought they could. No, I think
maybe they can. I'm not sure. Hey, Alan, how's it going? Hi from Germany. Good to have you on.
Hello, Vigates.
We'll give it like one or two more minutes, and then we'll get started. I don't want to take up too much of your time today. How many of you people drink coffee in here? You put coconut oil in your coffee? Love it.
Yeah. It's
Coconut
like
oil,
that
sometimes a little squirt of lemon.
bulletproof
Any
coffee.
big coffee drinkers here?
Yeah. It's MCT oil. Definitely recommend, guys. US 30 to the downside. Yeah, we don't trade it, but yes, equities are going to continue to fall. Fundamental standpoint.
All right, we'll go ahead and get started. It's already a little past 8 o'clock Eastern time here. I have quite a bit of setups to go over today. Then I'll pass it over to Aiden and see if he has anything else. Yes, I do think dollar is going to be strong for the remainder of the week. We will see. We're starting to see some higher time frame shifts, but overall dollar is still very, very strong. All right, so I'm going to get right into it. I'll answer questions towards the end, so save your questions because I cannot see them as I am breaking down charts, and we'll get right into it. There we go. You guys can see this. You guys can hear me. All good to go.
Mm-hmm.
All right, cool. So let's first start off by, I'm just going to start off at the bottom and go work my way up. So with Euro Swiss franc, we have been looking at pushes to the downside, and we've talked about this level of interest around 0.98. This is a psychological level here for EuroChef for quite some time now. Now, this was beginning of last month, September 2nd, that this setup formed. We were originally looking for pushes up into this area of supply. Now, why is this supply? Because if we zoom out, we can just see first and foremost the structure. We're forming lower lows and lower highs all the way down. Okay, we had an overall pullback in the market. Now, many people treated this as a break of structure and a bullish trend. Well, in all reality, we are bearish, right? So we need to be looking for overall pullbacks in areas of interest of supply to the left to be looking for potential shorts. So we swept equal highs. We came into a level of supply. Now, I didn't trade it from this level because this was not a very clear supply zone. I waited for the reaction, and we had the imbalance fill. It was just straight selling volume in here. If we move over to the right, we can see that we finally had that last run up and we broke structure. So now after that break of structure, I already know that we're higher time frame bearish. Now we're lower time frame bearish as well, right? We've cleared the previous higher low, okay? Last buy to sell. In here, what creates this supply is the fact that once we react from our zone of interest, we have the reaction, and then we push back up, trying to make that higher high just based upon market structure, right? But in this case, we failed to do so, and we made a lower low, which was already expected anyways because we came into that level of supply. So now this demand that it reacted from, because really every single pullback usually reacts off some form of demand level. In this case, this is a demand level, and obviously after the higher high was made, the higher low, in which we had the reaction from demand, higher high again, higher low. Now, this wasn't a clear level of demand, but we can just see the flip that occurred, that the shift in structure, or change of character, if some people like to call them, from demand to supply. So we didn't have that full pullback up into that level. We ended up taking a short from here. So it was a beautiful trade. We ended up taking another short from here, which was another beautiful trade. And then we got out at 0.950, was waiting for more opportunities to sell. But then we had that overall pullback again. So just because we cleared structure, or whatever you like to call structure, doesn't mean we're going to go long. Now, I say that to say this. We potentially could be starting to see some shifts on the higher time frame. We're starting to see that across the board. So I wouldn't be totally surprised if Euro Swiss franc just totally busted through to the upside. However, I still have to go based upon market structure, and we can see that within that this 4-hour candle, we can see this huge buy to sell. Remember, there's that 1-hour level of supply. We came up into that perfectly to the T yesterday. The high of that candle was 0.98006. So literally to the pipette. We came up into our level of interest and we sold it. So we're in pretty good profit right now. We're just maintaining our bearish market structure. If we scale into the lower time frames, I believe it is on the 15-minute. Could be lying. Who knows? Let's see. 10-minute. There we go. So we had the initial reaction yesterday. Okay. We were still maintaining our bullish structure, right? Because on the lower time frames, we're reacting off of demand in here, creating higher highs and higher lows. So I took a small position here, thinking that, okay, well, we haven't broken structure yet. I really wanted to see that clear of the prior low for the confirmation. But then we started to form this descending liquidity. A lot of retail traders trading short here, 1, 2, 3, 4, 5, 6 touches of this trend line. Right when price breaks out at 2 in the morning, it's the start of London session, then they look to buy price, right? Because we broke out of this trend line. That's what retail is taught to do. And then we push right back to the downside, taking their stop losses. So this last buy to sell not only broke structure to the downside, but it also failed to generate a higher high within this bullish market sequence. All right, so we finally made that lower low. Now, I'm looking for pullbacks to short this. I will only be adding about half or the remaining of my risk, so 0.5%, because I have 0.5% here, looking to add the rest here. So that's what you can do, ladies and gentlemen. If you are not sure whether something is going to react off of a level, or maybe you want more confirmation in your trading before entering, you can enter, what I like to call half risk, right? And for me, that's just 0.5%, because I risk no more than 1% per trade. So half risk here, 0.5%, wait for confirmation, right? It took a while for the trade to confirm. Now, what I mean by confirmation doesn't mean like, oh, it's 100% going to happen. It just means it gives me a higher probability chance that it's actually going to go short, where we're seeing more confluences after the reaction, right? So we failed to generate a higher high, lower low. We had this level of supply, or well, really it was demand in here where we initially broke out that came down to retest. And then on the lower time frame, this bullish candle here, as you can see, failed to make the higher high, and we made the lower low. So that was the flip from demand to supply. So that could be a level of interest for me to pull back up into before falling, right? Now, what we can also do when price is looking, and I'm going to be talking about this more with GJ, when price is reacting from a certain level of interest and we scale in, it could be 1 minute, 5 minute, 10 minute, 20 minute, whatever you want to look at, whatever looks prettier. We can go to the indicators tab. This is really the only indicator I use, VFI. It's the volume flow indicator. Now here we can see that price there's really no divergence in this case. Volume is still pushing up. Price is still pushing up. Volume is starting to push down. Price is starting to push down. Really, the only divergence I see, if anything, is right in here, right? Price has had that last run. It was really this fake out, right? We faked out of this huge descending trend line, or really this flag formation, if you can see the pennant, right? That's what retail is taught to trade. So this huge false break, the volume was still bearish here. So that signifies to me that this is a false move. And we're likely to see, since we had that break of structure, the retracement and the continuation. Now, obviously, nothing's ever 100% here. I just have to give probabilities. But that's what we can do in our trading. As long as we have the highest probable setups that meets our rules and we use good risk management, we're going to be profitable over time. If you are sitting, wherever you are in your house, at your trading desk, on your couch, at your kitchen table, whatever, and you think to yourself, I'm not profitable. And if you know you're not profitable, maybe you're not doing the little things right, because it comes down to the little things in order to be profitable, right? So if you guys don't have our trading plan, I would highly recommend it. It can definitely be, helpful, give you that little extra edge. Just message me after the live session for that trading plan. Happy to provide that for you. AUD Swiss franc. So I'm looking for shorts here. I still want an overall pullback back up into our level. So I don't believe I sent this out to my VIP community. I think I talked about it once or twice a few weeks ago, but I think it was maybe last week I talked about it. But I'm not going to take credit for it because I don't remember sending it out. But anyways, we're in a higher time frame bearish downtrend, right? We're making lower lows and lower highs. This simply was just an overall pullback, sweeping liquidity, coming back up into prior supply, essentially, and then we made a lower low again. This again was just another pullback. This is not a break of trend. Now, many people would get scared based upon these huge sharp moves to the upside and then maybe get out of any selling positions or look to buy potentially. Now, this is the worst thing you can do because you're letting your emotions get to you. Your psychology is starting to run your trading. And we know that psychology plays an important role in your trading. We can't let that affect us. So we had the reaction from our nearest supply level. Now we can see just a huge push to the upside. This was our nearest demand. You can just see that red candle. That's our nearest demand. We had the reaction from it, but failed to generate a higher high. We fell and made that lower low and eventually made the overall lower low compared to that swing point. Okay, so that was a level of interest for me to look out for. We had the reaction. We had one last push back to the upside. We can see this is 1 in the morning, 2 in the morning, 3 in the morning EST. For me, this is London session open. So that's going to be 7, 8, 9 a.m. GMT time for you, I believe, those of you who are on GMT time. But anyways, we can see this 2-hour candle, huge buy to sell, huge sponsored move, swept this prior high, came deeper into that supply, and then made the lower low. So what really would confirm it for me that I would really like is, I would prefer a lower low first compared to this low. That would really confirm market structure again for me. However, I wouldn't be opposed to taking this short from 64158 right now if it started to pull back. Even though we didn't make a lower low yet, what we are starting to form are equal lows right in here. So that sell side liquidity would be a good target if we did pull back into that level for shorts. So just to maintain bearish market structure, continue with over Aussie dollar weakness, I think that's what we're going to be seeing. So 64158 is my area of interest for shorts. Okay. AUD NZD. Now, AUD NZD, I've talked about this many, many times over the past month or two, right? We're still holding. Actually, no, I think I took out all my positions here. Maybe I'm thinking of the AUD CAD. Yeah, AUD NZD, I am out of all my positions here. I bought it from 1.0990. That was just, a lower time frame liquidity sweep entering into a level of demand and just continuing with overall market structure. But anyways, we formed this level of demand here. We can see the huge sell to buy, choppiness in price. I'll just zoom into it. Huge sell to buy, chop, 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 expansion, right? Clearing market structure, making that higher high again. I wanted that overall pullback into this level of demand for longs again. But obviously we can see that never happened, right? We ended up just sweeping lower time frame liquidity, having a quick sell to buy, and then another higher high was formed. So again, on the lower time frame, I wanted another pullback. I wanted to pull back down into here. Now, why is this important? Now, with this counter trend, we're forming that counter trend, lower lows, lower highs. I was hoping we get into that, but we didn't. We stopped. Okay. We ended up stopping, pushing up, failing to make a lower low, and a higher high was formed, clearing counter trend structure. So now this was that flip from supply to demand. Now, wanted to take that long upon the pullback. Now, even though I would have bought it here just based upon, buy limit, essentially, if price came down further into this level, I still would buy it again. So these levels are still valid for me. If we go to the 4-hour time frame, we can see this could easily just be potentially a huge expansion for a huge pullback back down into here or here for another expansion, even though this is a lower time frame trend, right? So we could easily see something like that in the continuation, which is why in here, go down to a lower time frame again, which is why when we failed to push down into this level and we made another higher high, this last selling volume to buy up with the imbalance on the lower time frame, 1.1254, was a talking point for me as well. Wanted to be looking for buys. Now I sent 1, 2, 3 setups. These were these levels of interest I sent to the VIP community. So all of you guys who are in VIP, if you guys are taking these trades, you should be in this. There's no reason why, just because it didn't hit our initial level the same day, doesn't mean we should be forgetting about it. Okay, this was talked about when the setup formed 3 weeks ago, essentially, over 2 weeks ago. Doesn't mean we should forget about it. We need to be keeping an eye on these levels that we've been talking about in the past. So we got to be making sure we're doing the right things, the little things right. So let me go down to the 30-minute. Or maybe it's the 10-minute. Yeah, the 10-minute here. So we've had the reaction from our level, okay? So now if we are to go long, we probably need to do it now. We had the huge rundown, right? The huge push to the downside, and then we're seeing the reaction. So if we are to go long, we probably don't need to come below this level. If we come below this level, then we probably will be pushing down into our secondary level down in here. And obviously, if we push further down, we'll come down into 1.1070. But anyways, if you're looking to take this off of, some sort of confirmation, I guess you can see, this was our last push to the upside and then our last sell-off before the big buy-up. Okay, we have liquidity here. So we could come down react off the last sell to buy volume that had the initial reaction from our level, 1.1282, had that reaction. If you're more of a conservative trader, what I would wait for is simply this. I would wait for some sort of reaction, that failure to generate a lower low, because technically we still are counter trend bearish, right? We have to understand that. So what you could do if you're more of a risky trader is just place a buy limit from that level. If you're more of a conservative trader, since we are still counter trend bearish, wait for that failure to generate the lower low and then the higher high again. Then we can be looking to take it off the third drive into the high. That would be that clear market structure shift, in my opinion. So, like Aiden said to start the live session, it is pretty much a crappy week. It's been a crappy couple of weeks in the markets. Haven't been trading much, to be quite honest with you. But my goal here is to provide you areas of interest to look out for, and provide you biases. My goal is not to provide you signals. My goal is not to say, hey, buy here, sell here. If that's what you're looking for, please, respectfully hop off this live session. That's not what we're here to do. We're here to provide you areas of interest so that you can pair it with your own analysis and potentially take the trade based upon your own strategy or confirmations based upon our strategy. So, I'm not going to tell you whether to buy or sell here or whatever. It's totally up to you. So that's AUD NZD. AUD CAD, we're in like 7. Actually, I think we're in 7 positions still holding all the way down to our overall target at 8.7. We're in 1, 2, 3, 4, 5. We had a loser there, a loser here, and then a winner here. So that's 6. We're in a winner here, 7 in profit, and then waiting for a pullback to enter our 8th position. So we're in 7 in profit. We've lost 2 on this. Still huge returns just on AUD CAD. So what we were looking at yesterday was simply just a continuation with market structure, within an area of supply. So on Friday, I believe we swept these equal highs. We swept them just by a little bit. We pushed to the downside. And then within this counter trend structure, we had the reaction and the failure to generate a higher high, and then a lower low was formed compared to the swing point. So just continuing with higher time frame market structure, we can then scale in, and then this is the lower time frame break, giving us even more confirmation. So we swept equal highs to the upside. We probably came into this wick here, which we did come into that wick, which was the buy to sell in a lower time frame that came into this supply in which we sold it from last Friday, or 2 Fridays ago, actually. So I'm still holding this position, and now still holding this position. We just had the pullback back up into that level. Stops are above the overall swing high here. So did have a little bit more drawdown than I anticipated, but still was a pretty good trade. We had a spike up yesterday. I believe that was NZD news. Maybe I'm wrong. Who knows? Yeah, maybe. I don't think that was the correct time, but we did have NZD news. That would have affected the Aussie dollar as well. But then we ended up making a lower low again. So looking for overall pullbacks again, we can see here, lower time frame, that really this was the failure to generate the higher high. Okay, we had the pullback, and then we pushed up, and then we made the lower low. So really anywhere in here would be good for overall pullbacks. We understanding liquidity, this is probably not going to hold. We're probably going to go up and sweep it and then continue. So going to the 1 hour time frame, it's simply just that 1 hour imbalance. This last, buy to sell move, filling that imbalance. 88275 stops would be above that wick high there, targeting 8.7. Okay, so that's what I'm looking for. Just continuations with AUD CAD. NZD CAD, I don't really have anything for. I'm still in this short. Sent this out last year, I believe. So if you guys are not tuning into those, you guys are missing out on free money, essentially. I'm giving this stuff out every day. All right, so essentially what we had that sell from 2 Fridays ago. So that was the same sell we had on AUD CAD. We had multiple sell opportunities. We sold it here. We actually took profit. We're not in this position anymore. We sold it here. We sold it here. We sold it here. And we sold it up there. Those of you who are in VIP, all of those trades have been sent to the Discord. So you guys can attest to all of those. But anyways, the latest one, we had the entry 2 days ago. So what was that, Sunday? Monday morning or Monday afternoon, we hit our level. So this was the exact level in which we talked about. I think I also talked about this level in here on AUD CAD or NZD CAD. But essentially what this was a fake out of the inverse head and shoulders retail traders, right? Retail head and shoulders. If we're in a downtrend, guys, why are we looking to buy this upon the break of the head and shoulder neckline? I don't get that. That's why retail loses so much. And that's why 99% of traders quit, is because they trade this bull crap. It just does not work. Why would we be, first and foremost, even if patterns did work, which they don't, why would we be trying to long this in a downtrend? I mean, it's just common sense. It's stupidity. That's what it is. So we sold it here. I was waiting for this. I called this out before. I was like, this is an inverse head and shoulders. I'm going to wait for all the idiots to get in long here so then I can short off. Okay, so that's exactly what happened. We ended up coming up into a prior level of imbalance on the lower time frame. I believe it was a 30-minute imbalance fill. So we can see here, yep, perfect 30-minute imbalance. It was just straight selling volume in here. That was the last wick low that provided any buying, right? So there's a straight selling. We pushed back up, filled that imbalance, and then we fell and made the lower low counter trend break, right? This was our nearest demand level, which is why I had that initial level there, but also had that level there. Okay, so we had the beautiful reaction on Monday, and we're looking to continue short. We had that huge spike up. Now, this was probably 9 o'clock Eastern time last night, which was that NZD RBA rate statement, or RBNZD rate statement. So as we can see, just because we had huge volatility to the upside doesn't mean we're going long. News was just used as the excuse to sweep liquidity there, to then continue in its overall direction, as it was always meant to, right? So I don't really see anything in terms of setups. I actually missed this morning. I believe it was on the 10-minute. You can see here. We reacted off the nearest demand, okay? Reacted off demand, failed to make a higher high, cleared it lower low. We broke below those wicks, invalidating that demand here, right? We also came into this little tiny area of supply. So that would have been my level to be looking for shorts. I don't have a re-entry at this time, but my overall direction or bias is short, right? So next one, USD JPY. So we're still looking for overall longs here. We're still holding our position from 140.81. Now, this was just a continuation to the upside. We're looking to target our higher time frame objective at 147.67. This is why we have to be looking at the higher time frame, because if we don't understand higher time frame objective, we're going to be shooting ourselves in the foot when we look to take short positions. Okay, so daily time frame or higher time frame objective, especially since we're still above the daily 50 EMA. That and the VFI is the only two indicators I look for. I think it's on the weekly. Weekly, if it will load for me. The previous high back from 1998. We're going to take that out. That's just almost a given. And if we zoom out, that's what we're looking to attack next. Price is pushing higher. There's really nothing in here to say short. We're just going to be looking to attack buy-side liquidity. Probably going to look to attack 160.4, which was 1990's previous high. Okay. We're dollars in a bullish uptrend, higher time frame. So when we see this huge crash that we did, when was this? I believe this was on the 22nd of September. The overall goal here was just to sweep liquidity, right? Sweep liquidity, free up liquidity so the institutions can get in long at a better price yet again. That's what they do. They sweep all the liquidity. We actually come into this level, fill up in balance. We bought it here, 140.81, stops below the overall demand level. And then we had the reaction. Huge sell to buy, sort of a little reprice and a continuation. And we're forming relatively equal lows now. If we go to the 4-hour time frame, we can see that this is the level of demand. Huge sell-off reaction, maintaining bullish structure right back to the upside. A little bit of a pullback or repricing event and then continuation. So this becomes our new demand level. So looking for that lower time frame liquidity sweep, boom, boom, back to the upside. So 142.6 marked that level off. You're not going to want to miss that. You can see how confident I am in these setups. You have to be confident in your trading. I lose trades too. We all lose trades. This could easily make a move to the downside and I lose this trade, but oh well, right? I lose trades on occasion, but you have to be confident in your analysis. So the reason why I have 2 risk to reward tools here is to show you that, this is a 188 pip stop loss. And I know a lot of you are like, 188 pip stop, that's too much. Well, I look at it in terms of a risk to reward standpoint, not a pip standpoint, because we know percentages make money and not pips. If you know anything about trading, right? It's just simple, and how you invest. You look for ROI, percent return. So this is a 1 to 2.7. This does not meet my rules. I look for a 1 to 3 at least. So those of you who are okay with a 1 to 2.7, then you can looking to enter there with a conservative stop below our last selling volume here before the buying started to come into the market. Or you can be more of I wouldn't say a risky trader, but a little bit more risky than the conservative ones, is to just place stop right below the overall demand level, which is still valid. It's a valid stop loss. That would give you a nice 1 to 6.1 risk to reward as well. Or you can take both, half risk here, half risk here. Just in case you only react off of here and go long, you're still in this trade. But, if you come back down and hit the stop loss and come a little bit lower and then go long, you're still in this trade, still providing you with an overall, probably a net profit. Just gives you mitigates some risk, gives you a more highly probable chance that you're going to make money off of it. So that's UJ. With GJ, it's a little bit different. So I said, I think last Saturday, that I was not going to be selling here. Now, what I meant by this was I'm not just going to be placing sell limits, right? Even though we are overall, I wouldn't even call us overall bearish. I mean, this is a lower low compared to our swing point, but higher time frame, we're still bullish. Right, we swept this liquidity, all this liquidity here. I think we swept this low as well. Yeah, we swept all of these lows. We did. This wick came all the way down below these lows. That's pretty cool. So sell side liquidity has been taken. We could easily see continuations to the upside on this. So I still am looking for my longs from these two levels here, demand and then lower time frame demand. If I just quickly show you why I was looking for them in the first place, it's because we pulled back, but we failed to make a lower low. This is not a lower low compared to this low. We failed to do so, and we made a higher high. So counter trend, we're bullish. Shoulder, head, shoulder. Fake out, enticing retail shorts below that low. I mean, hey, I guess I have to give it to them. At least they were trading in the right direction, but not at the right time. Reaction off the demand level. Long. Take retail trader stops above that high, most likely. In the process, sell to buy, fail to generate a lower low, higher high. This becomes that supply to demand flip. So that would be that perfect entry, just didn't pull back enough. So on the higher time frame, we can see we generated that pullback, right? That intermediate level of demand, just the inter-range demand. Really the range starts from here to here, right? There's inner range demand here, inner range demand here. And obviously we have the overall level. So still looking for buys from those levels. However, I will be looking to hedge my positions with a short. The reason for that is because I had these areas of supply marked off to begin with, right? These were our last, liquidity runs, last buying volume before the major sell-off that occurred. So if we are to go short, we really ought to go short from these two levels, either one of these, right? We had equal highs, drawn liquidity. We attacked them. We swept those equal highs, came into that buying volume, counter trend, high, low, failed to make a higher high, lower low. That's why these two levels are levels of supply. Okay. So we had the reaction. Now I'm looking for, I think it's 30-minute time frame. Yeah, 30-minute time frame. Actually, let me first show you the 10-minute. I want to show you the distribution that we're seeing. We're starting to see a slowdown in price. Okay. Price is starting to slow down. We had those equal highs relatively, had that last buy to sell volume today at 2, 3 in the morning, London session manipulation. And then we had the break of structure to the downside. Swing point, swing point, swing point, swing point, swing point, high, lower low. So now the distribution should be complete. We've reacted off of our level of interest right in here, that huge blue box, right? So let me go to the VFI and we'll see if we can see any divergence. In this case, we have a lot of divergence. Volume is starting to diminish. Price is continuing to climb. Now, you guys know what divergence is. I've explained it many times before. When the banks are starting to offload their positions, they need someone on the other side of the market to buy them from them, right? If they're starting to sell, they need someone to on the other side to buy, right? Because they have to have someone to sell to. Hence, someone has to be buying. Therefore, price starts to still climb because they're buying. Yet volume is starting to diminish. They're getting out of their buys into shorts, which is why when we see divergence, this means something, an exchange between buyers and sellers is going on. And it could be a good confirmation for a potential reversal. Doesn't mean it's going to be a reversal, but it's a good confluence to have. So we've seen that break of structure, and then within the counter trend, high, low, failed to make a higher high, lower low, right? That flips from demand to supply. Okay. So I think it's best seen on the 30-minute. You just have to flick through the time frames, guys. I don't trade any specific time frame. I just have to flick through them. And this 30-minute time frame looks the best here. Buy to sell. We're starting to see that rollover in the EMA. So GJ looking good for shorts. However, pound is still strong across the board. Okay, we're still in this huge counter trend uptrend here. You know, ever since we've had the huge crash that we saw, immediately following the crash, there was an immediate push to the upside, very strong push, which signals to me huge liquidity run, getting in at better prices, 150, 149. These are huge psychological levels for GJ. Huge push up, fail to make a lower low, higher high. So be careful when trading this. We have good confirmation for shorts, but it doesn't mean it's going to happen. Okay. So higher time frame, yes, actually, like I said before, higher time frame, I don't even know what we're doing. We're really just in a higher time frame range. But we've reacted off supply levels. We had the lower time frame confirmations. So we could be taking it short, maybe short into our demand levels. But if we do have a higher high now, we have to just be prepared for that. And at that point, then we can really confirm longs, because this would really be our last point of return for shorts. If we make a higher high, we're bullish again, right? We've cleared liquidity, higher time frame, huge sell, huge buy. We're just going to be looking for pullbacks to then start our uptrend most likely. But until then, we have good confirmation for short around 164.44. Okay, so that's GJ. NZD Swiss franc. This was another good trade we sent out yesterday to our VIP community. And this is very similar to AUD Swiss franc that I talked about. I said, we actually had a short here on NZD Swiss franc 2 weeks ago on the 22nd, just playing off of a level of supply on the lower time frame. It looked like this Asian range, fake out of the Asian lows, fake out of the Asian highs, short off, enticing shorts, sweeping stops, enticing buyers, sweeping stops, continuing higher time frame, buy to sell. That's what occurred right in there. All right. So that just prevented me from wasting time to zoom into it and show you. But anyways, that was the pullback back up into that level. Also was in balance. Equal highs were right below it. So that was a good draw on liquidity. Perfect mitigation. And then we had the reaction, choppiness, continuation short. So that kind of becomes that intermediate level of supply. Wouldn't have sold it there, but I would have waited for the reaction at least. And where does that line up? 0.5700 cycle level. So anyways, looking for an overall short. Okay. So when we, in a lower time frame, we generated descending liquidity, huge buy to sell to start London session, 2:30 in the morning mitigation, continuation to the downside. So 2-hour time frame, we can see that huge buy to sell, just like we're looking for on AUD Swiss franc here. I'm still looking for overall pullbacks, right? But NZD Swiss franc had that reaction. Stops were above this high. We can see we did not come up into that. We actually came up into just a lower time frame level of supply in here. So that could have been an additional entry you could have had. I didn't see that in time. This occurred when I was sleeping. So ended up having a huge liquidity run, failing to make a higher high, push down. We can see the reaction from demand here. Push back up, filled in balance. From the failure to generate the higher high, lower low was formed. We broke the structure, invalidating this demand, right? Because we never generated the higher high within this counter trend bullish sequence. Okay. So now that we failed to generate a higher high, we made a lower low, we can now be looking for pullbacks to short. Now, I really don't see anything in here to signify a short. I looked at all the time frames. Really, it's just this region of price in here. You can be looking for shorts, maybe just from that level. Stops would probably have to go above this high, though. If you wanted to wait for more of a deeper pullback into imbalance in here, that could be a possibility. But just following structure to the downside, waiting for these institutional concepts to come into formation during the right times of day. And then that's really it. I mean, that's our strategy. And it takes time to understand, but right when you get it, it's beautiful how it works. When you understand the why behind trading, it becomes so much easier, but it just takes time and experience. GU, I don't know why I have these marked up. going to keep going. I don't know. I don't have anything on GU. GN, G-Chef, G-CAD, and GA all look the same. They're the exact same thing. So simply put, liquidity run, huge sell, huge buy, huge repricing, huge push up. That's it. Man, we have gone over those setups multiple times. Clearing structure. So really just wanting an overall pullback into our level of demand for continuations. I don't think it's going to happen anytime soon. Could take weeks, could take a month. Who knows? Pound is still very strong. And Aussie is quite weak at the moment too. So that's really what it looks like across GA, GCAD, G-Chef, and GN. Euro CAD, I don't have anything for right now. Nothing that I'm too interested in. Euro JPY. Okay, I can go over EJ. Is there anything on EG? Yeah, there's stuff on EG. Okay, cool. Almost done, guys. I'm gonna have Aiden go over CAD-J, just because I think he's been looking at that for a little while. So I have EJ, EG, and EA left, and that will be it for me. So remember, you guys recall us taking like 3 different short positions in here, right? We understood that higher time frame, our overall level of objective was this prior level of supply, right? This was the last liquidity run high, the last pullback before the major sell-off that closed below the swing point that generated this huge, expansion to the downside. This was that last point of return swing point. We finally pulled back up into it. So I said, even though, I'm going to go to the weekly to show you, even though you could classify this as still being bullish, right? I know it's blurry, but we failed to make a lower low, and now we're starting to creep up again. Could we make a higher high? Yeah, we probably could. Sure. But just in case, that's where I wanted to be looking to take profit on any buys that I had before we reach the objective, which I was looking for buys. And we had a couple of buys, but we finally had that reaction off of that level. I think we had a few buys somewhere down here. Yeah, we had a buy from the level of demand down in here. But anyways, that was a while ago. Continuing. So we had the reaction from the level. Descending liquidity was formed, a huge last sell to buy, breaking counter trend structure, failed to generate a higher high. This becomes that level of supply. We had the beautiful reaction right there, 144 to the exact pip. I think, see the high of that candle was 144.04. So beautiful reaction off of this level. Last buy to sell, counter trend breaks, right? Enter in short again. I then enter in short again here over to the left because high, low, failed to make a higher high, lower low. This acted as liquidity because we didn't quite pull back up into the supply. Had their entry short here, stops above the high. Because why? This high, this is all intermediate structure in here, right? This high generated this lower low. This high generated that break of the structure that, okay, let me just slow this down a little bit so you guys can understand. This was the low and the pullback that generated this higher high. So when we created the lower low below this swing point, this is the high that created this low. This is the range. So when we have the overall pullback, that's where stops need to be, above that high. You could put it above that swing point high. You have a better risk to reward, but then you run the risk of it running by a few pips and continuing, even though it still maintained its bearish structure. So anyways, had those 3 shorts, and now we took profit at 138. 138 pretty much had a wick entry on all 3 of them and pretty much a wick take profit, if you want to say. But anyways, the reason why we took profit here was because technically we're still bullish. Even though we reacted off of higher time frame objective, we're still counter trend, higher time frame bullish here. We're making higher highs, higher lows. So we've made the higher high. We're starting to pull back, make that higher low. Could we go short and make the lower low overall? Yes, because we reacted off of objective. But we still are counter trend bullish. So that's why we need to be taking profit at areas in which we could possibly see a reversal to go long again to make a higher high. And that was 138. 138, that was below these equal lows on a lower time frame. Also filling up in balance in here. You can see strong, straight bullish momentum. And also, right, after forming that, higher high, higher low, this is really where the kind of the consolidation occurred, which created the demand before the next expansion to the upside, where we broke counter trend structure. So that's where I wanted to take profit, this level of demand in here. We had the reaction, failed to generate a lower low, higher high. Okay. So now we're probably going to be looking to make a new higher high. Okay. We're creating equal highs now. Creating equal highs. Boom. Buy side liquidity. If we get a pullback, I'm looking really at this point kind of 3 levels. I would probably say, let's call it 3 levels. So those of you who are, more conservative, we can wait for more of a pullback on these back down into discount, right? Because our new range is from this low to where we start to pull back. It could be here, it could be somewhere else, but this is where we're starting to pull back. So pull the fib. We could be entering around that 61.8 fib. This is, intermediate demand in here, 140.38. But this is really where I wanted price to pull back down into 139 because we swept liquidity here, right? This was the huge sell to buy, liquidity run short, failing to make a lower low, flipping structure, breaking counter trend, right? So this was that last sell to buy. So 139, psychological level, failed to generate a lower low, reaction off higher time frame demand, counter trend higher high, right? Last selling volume, imbalance in there. So that's really why I wanted that. But we never got the pullback. And we ended up, stopping here and making another higher high. So I said, okay, well, maybe 140.38, this could be another level of demand. So just getting back down into discount. But if we just have, just continuations with this type of structure, we could easily see the reaction off of this level of demand and go along like that. Now that's an option as well. But if we break the structure, it doesn't mean we're bearish. It just means we're having an overall retracement for another higher high, most likely. So either of those 3 levels will work. Personally, for me, I won't be taking this. This is the level of interest that you could play off of, but I am not going to be buying it here. I won't be doing that. I will only be looking to buy at these 2 levels. Not to say that this can't work out. You could easily buy this there. I'm not saying you can't. But for me personally, I won't be buying it there. So if price ends up going like that, then I can't take credit for it. And you guys can hold me accountable for that as well. All right, 2 more and then I'm done. Euro GBP. So you know how the pound, we had that huge run up. Well, pound was dying at the time. So pound strength, euro weakness, or flip that. Euro strength, pound weakness, excuse me. Big buy up, liquidity run, higher time frame, huge sell off, major reaction from the huge buy up, right? So again, retail pattern, flag formation or triangle, whatever you want to call it. Huge sell off to entice shorts below, break out below this flag or pennant, whatever. Big buy up, take their stops. Now we entice the buyers above this pennant formation. Nope, right back to the downside. Right. So this huge institutionally sponsored buy volume before the sell-off is now our area of interest. So let's zoom in here. We had the reaction short again, pulled back up, and then the lower low was formed. We pulled back, mitigated that last buy to sell candle, chopped around, created that last buying volume before the major sell-off, right? Before that overall lower low was formed below this sort of swing point. Okay. So descending liquidity is what we're forming now, right? 1, 2, 3, 4 touches right there. So what I would like to see is pull back up into that 4-hour or 1-hour level of supply to then take it short. Sits at around 0.8900 psychological level. So that's what I would like to see for continuation short, because we are looking for more of a pound strength right now. But at the same time, fundamental data would suggest pound would continue to weaken because, the economies, in the Commonwealth countries, and especially the UK, is not too hot right now whatsoever. So having that fundamental understanding, we can't be surprised if we end up making a higher high. All right. We just have to be careful. And obviously we are careful because we use good risk management every time. But just based off of pure technicals of what's going on right now, that would be feasible or viable for me, right? But we are still overall bullish, as we can see. So we just have to keep that in the back of our mind. So, yeah. Last one, Euro AUD. This is just simple continuation type formation here. You're going to see we're very much bullish. Okay, higher time frame. Just zoom out to a higher time frame. We're starting to create relatively equal highs. We did take out that liquidity, but I do think we're going to run higher, probably back up into at least 1.56, preferably back into 1.58, 1.59. But anyways, 4-hour 50 EMA is approaching, so that's really good. Good confluence. We're just, we're trickling here. There hasn't been any deep pullbacks. We're just reacting off of every little tiny, level of demand. pullback, whatever. So what I'm looking for, simply put, is just continuations. We can see higher high, higher low. Add that last sell to buy, higher high. All right, now we're just looking for a higher low for a higher high. 1.52. 1.5200 would be that psychological level pretty much to the T at where we're looking to enter. So I've said this before. I've said this many times before. It's not a coincidence how these psychological levels line up with these areas of interest or where price starts to react from. Why is there selling right here? Well, probably because 1.52 is in psychological level. People are looking to sell at these round figures. So when they get in short, price pushes up. This is where we need to come mitigate, most likely. So 1.52 would be my entry on Euro AUD for buys. All right, guys, hope you learned a lot from me here today. Hopefully you marked off all these levels. I will stop sharing my screen and return back to the... Oops. There we go. All right, so
reading through some of these comments.
Yeah,
someone says stop loss is a scam. How is a stop loss a scam?
Oh, well. Okay. Let's see what we have here, guys. Please, if you're going to act like children, you can just leave. I'm here to actually teach you. So please don't say anything ridiculous. Let's see. I trade retail and haven't lost a trade for 2 weeks now. Some person just using retail the wrong way. It works 100% for me. I mean, if you found a way to trade it, I know some people can find profitable ways of trading retail. It's not the real way the market moves, though. And, I hope that you understand that. Retail is there's no significant reason why it moves that way. From an institutional standpoint, the banks and institutions manipulate price. They move the market. So they don't trade retail. They don't even trade anything. They base everything off of the order book, off of your stop losses, off of your pending orders, my pending orders. But if I'm trading the way that they trade or looking at the clues they leave behind, I have a more highly probable chance. So, I mean, congratulations. I mean, keep going. But, I just prefer smart money because it's like the real way that the markets work. Let's see.
Exactly.
Yeah, I agree, Tomas. I believe that there's going to be some sort of huge liquidity event with the US dollar at some point soon. I think it's just priming.
Oh, 100%.
Something.
I mean, we will be entering into a real recession next year in the States, and that means really globally. So there's going to be some serious manipulation and volatility in the near future. All right, so yeah, CAD, can you see, Nate, my screen?
Yep.
Awesome. So CAD, I really want to see us trade down into here where we ran out ascending liquidity. And if that's the case, I do think we then have room to continue to sell into this area of demand that was never originally accounted for, right? We had the sell to buy, trading into demand here, pushed higher, and we never retraced immediately into that. Instead, we just simply continued to trickle up, right? And so I think on the way down, we need to fill that in, all right? And so for me, that means we have room to sell this thing. As number one. Number two, we have very clean pool of liquidity resting here, right? And you can see this initial low, we traded down into it, but not through it, down into it, but not through it, down into it, but not through it, creating equal lows here as well, right? So for me, that's the draw on liquidity, and pushes higher mean excuses to get premium to sell into that, right? And so with that being the case, I really do like this up close area of supply, right? This kind of sell model I really like to see, right? Where we kind of engineer liquidity. We run the low first, run the high, and then break lower. This provides a nice area of premium for us to sell into that pool of liquidity, right? So this is the this is the setup. This is the area of interest. You could kind of refine it up into here, right? But it's oftentimes that, just depending on, what potential news is coming out or what the other pairs are doing, you might not get that, all the way up into there. We might only get the open, right? So that's why I have this whole area marked off as the POI for shorts. This is kind of my favorite setup that I'm looking at in terms of layup setups. So definitely keep this one in mind as we trade into that, right? So we're kind of pushing lower now. What's likely going to happen is we run out these lows here and then have that final kind of buy to sell, right? And then push lower, right? So that's pretty much all I had in addition to what Nate's already covered. So I guess I'll hop back out and we can answer some questions.
Let's see. What are session crossover traps? So session, usually between Asian and London session, like the start of London session, and then between London and New York session, there's usually some form of manipulation that occurs in the form of, taking liquidity. Usually, towards the start of New York session, you'll see some sort of run on maybe the London session low or high, or in the start London session, maybe the Asian high or low, just using liquidity to provide, volatility to start the day for the banks. Now, in terms of scalping, I don't scalp. I mean, I trade every time frame because I have a holistic understanding of the market. I see the market from every time frame, so I know exactly what's going on. So I can't really help you in terms of how you can use it for a scalp. I mean, I would just look for, the overall trend direction. I would look for liquidity to be run in the opposite direction of trend during those times of session, changeovers or session opens, right? Especially London and New York, and then look for the continuation in the right direction for the remainder of the day based upon, the pullback for the mitigation. I guess that's really the best I can do. As long as you're doing top-down analysis, you're going to be fine. And then, the lower time frame manipulations that occur during these session overlaps and session opens can definitely be helpful for intraday trades.
Yep, time and price is so critical with your trading as a confluence, and we really like to kind of teach that in depth in our courses. There's a whole video, 40 minutes long, dedicated to time and price and how to understand what's happening at very specific times of day.
Yep, definitely.
CAD, would you take trades into the POI or wait till the POI is hit before taking a trade? Look, as long as you understand that you're taking more inherent risk and trying to buy up into the supply area, because we are currently in a downtrend and we understand the objective, right? But if you find a setup that meets your rules, by all means, just understand you are, it is riskier because the real draw on liquidity is going to be those equal lows, right? It's going to be mitigating that demand zone that I outlined. So, maybe half risk if you find an opportunity, but, I typically don't like to advise getting into the habit. Just because you have a POI doesn't mean you should buy up into it every time because it's there, right? So just
exactly. Yeah, we have to be treating each trade as its own. Because who knows? What if the POI isn't met? Then you're losing the trade because you're just trying to trade into it. There's no reason behind the push into the POI as a trade. There's no confluence. If there is a confluence, if you can find a trade counter trend that you can buy into the POI, sometimes that's what we do. That's what we call objective, right? Our POIs or our objectives are POIs on a higher time frame. So if we're higher time frame bearish but counter trend bullish, and we have our liquidity principles being met and the setup forming to buy it, then we'll target that POI in the higher time frame. But it's only if the trade has its proper confluences and the rules are met. We can't just trade willy-nilly because we think a POI is going to be met, because what if it doesn't? Well, then the people who waited for the POI don't lose anything, but then the person who traded into it is now losing money because they did that. But
and then you've lost money, and your psychology is taking a hit, and then you question, oh well, do I want to take another loss and place this and sell it here? So it's don't do
it's the tiny things, right?
Exactly.
Let's see. Does volume and price divergence hold a lot of weight when determining if a potential reversal is imminent? I don't use it as a sole confluence. I use it as a confluence, but if I see it, that doesn't mean I'm just going to trade it. I look for volume and price divergence in an area of interest, right? So, for instance, just share my screen and show you what I would be looking for here on something like Euro Swiss franc, right, would be that volume and price divergence, right? Because we've come into an area of interest. We're higher time frame bearish, lower low, lower high, lower low, lower high. This was already a predetermined level of supply that we were looking for shorts from, 0.98, which is that psych level. Right? We've had confluence in here even to begin with. So since this is on the 1 hour, now we can scale into a lower time frame, maybe 15-minute. We zoom in, we can just see 10-minute maybe. It really doesn't matter what time frame. We're just trying to look at the picture, right? Because price, lower time frame is just zoomed in version of the higher time frame. Higher time frame is just a zoomed out version of the lower time frame, right? That's why when people trade just the 15-minute, they don't really know what they're doing, because you have to have a holistic understanding of what's going on. It's a piece of art, really. But anyways, when we're starting to slow down in price, right? Just discrete higher highs, higher lows into the level, right? We're starting to see, consolidation, choppiness, and then price, fails to generate a higher high maybe, or just makes the lower low, right? We've cleared structure. This is, distribution in its simplest terms, right? We've took liquidity right here, this huge buy up, enticing buyers above the trend line, failing to make a higher high, lower low is formed, discrete higher highs and higher lows. We're starting to shift structure. This distribution, this shift in structure into our original level, we had the reaction from it, the immediate reaction from that level of interest that we already wanted in the first place. And now we're seeing that shift in structure. So now what we can do is simply just go to the VFI, and you want to look at the volume and price divergence, not immediately. You don't want to look, you can look at it when it enters your area of interest, but in this case, before any of this occurred, it was just, we were following volume and price, right? That's why we wait to see how it reacts from the level, right? And, when price starts to diverge, right? In this case, volume is starting to fall. Price isn't really starting to rise. So there really wasn't much divergence here, but let's just say it was. Let's just say that the volume was going like this and the price was still pushing to the upside, right? Huge divergence. When I see the break of structure occur, that signifies to me that, okay, we've entered into the area of interest. We're slowing down as we approach the level of interest. Volume and price has diverged. It's a good confluence. And the market has shifted structure. Now I can be looking for pullbacks to short, right? It just gives me extra confluence, but you want to look for volume and price divergence in your level of interest already. You can't just have it somewhere down here. You can't just look at, the VFI right here and be like, oh, okay, well, right here, there was divergence. We had fall in price, but, volume was maintaining or potentially increasing. It doesn't mean you should just short it here, because it wasn't in any level of interest to short from, right? This was the real level of interest, which is why we had the reaction. So hopefully that clears that up. Let's see.
And we have the scam bots.
Yeah. You guys trade equities or indices with the same principles, or use Forex knowledge as an indicator? So no, I don't trade equities or indices. I don't trade anything but Forex. But based upon smart money and how institutional concepts what they are, they can be used within any asset class and over any market.
Yep,
So
same
you can use
concepts
them.
are applicable.
Yeah.
For sure.
Because institutional concept, I mean, that's how any market around the world is made. That's how any market moves. I mean, you can be trading indices, commodities, futures, whatever you want to trade. They're all going to be moved in some way or another, some form or fashion, based upon institutional concepts, because we have to understand who's moving the market in the first place, who's providing the liquidity. That's the institutions. It's the banks, the central banks. So once we have that knowledge, then we can take institutional concepts and apply it to pretty much anything. I just personally just trade Forex. I don't like anything else. I like the way Forex waves and how it moves. But yeah, you can apply the same concepts we teach into equities, cryptos, indices, whatever.
Mm-hmm.
Alrighty, let's see. Let me give you guys an update. I think I have a few. Those of you who are in the trading challenge, that will be ending next Monday, I believe, 12th. No, next Wednesday. Sorry. So we have 1 week left in the trading challenge. And then I will be announcing the winners that Saturday, on that Saturday's live session on the 15th, and providing you top 3 winners with your reward. And that will be trading challenges paid for by us and mentorship, all inclusive, without charge. That's for the winners. Also, our psychology series on YouTube, completely free. I just go over really a surface level understanding, but for some people it can be quite in depth. You'll understand what I mean when I talk about what I talk about in those videos. I came out with episode 2 last Thursday, and I'm coming out with episode 3 tomorrow. There are going to be 4 episodes in total. And then what we'll do is we're going to hold a webinar similar to what we're doing here, but it's not going to be anything in relation to charts. I may have a few charts as examples, but really it's just all about psychology, because I like to say the 80-20 rule. 80% of your trading is psychologically based, whether you know it or not. It really is. Everything comes down to your psychology. And then 20% is just the strategy that you learn. So watch that series. It's completely free. Check it out. It's really good content, good value. Let me know what you think. But then, we have our psychology course that's going to go way in depth into everything, into even more things that, people don't even know they do on a day-to-day basis, that really will help you. That will be released, and we're going to have a special for it on Halloween. So the 31st of this month. So I think that's covers my updates. You guys transpire consistency. Thanks for teaching. Yeah, I appreciate the kind words. We try to be, as consistent and transparent as possible. That's really, how we help our clients to become very successful traders in the long run. Let's see. How long did it take you to grasp a smart money ICT? I'll just say smart money. I don't trade ICT. I have respect for him, but I don't know his strategy. I guess apparently it's similar, because a lot of you guys say that. But how long did it take for me to grasp it to where I could apply it confidently? Well, ever since I started learning, I was applying it. And maybe I wasn't confident because I didn't have my psychology where I needed it to be. But I would say to where I found consistency and profitability from there on out was probably about a year and a half into it. It takes time. It's a process.
Mm-hmm.
I did win a lot of trades before I became profitable. I did lose a lot of trades. I had a lot of learning lessons. But the only thing that people really don't understand, and I can't harp on this enough and say this enough, it may not be anything you're doing wrong. It's just you need time. You can't speed up time. The real teacher is experience. For me, I have my mentor, but it took months on end, and it took repetition. Repetition really creates habit. I say that all the time. You keep doing something over and over and over again, you're eventually going to get it. It's how the law of the universe really works. You keep practicing, eventually you will find yourself understanding it. And it's really quite interesting because, you may be failing for a year or maybe even 2 years, but at some point when you get it, it's going to be like that aha moment. You're just going to see it, and you're going to start to see consistency like you've never seen anything else. It's a really weird feeling. It's hard to explain, But that's why I keep telling people, don't quit. Do not quit. Because if you quit, what advantage is that, right? If you're not getting something initially, find a mentor, find help, find resources, utilize them, but practice and understanding that you're not going to be profitable right away. It's not going to take a month. It's not going to take 6 months. It's going to take longer than that. But if you stick it out and you learn the right way and you practice the right habits, eventually you will get it, and you can easily be where we are today, or even better. Who knows? But just something that I wish my mentor or my mentors before my real mentor had taught me. They didn't teach me anything about that. So, based upon my experience, that's what I can give you guys.
Mm-hmm.
I guess checking for AUD CAD and NZD CAD. Yeah, I mean, I went over that to start the session.
Yeah.
I'm looking for overall shorts on them. I have a level on AUD CAD at around 0.88275 for shorts. NZD CAD, I don't really have any re-entries. Overall, we're bearish. I already had a short yesterday that I'm still holding from 78226 on NCAD, and ACAD at 88682. So I'm already in profit on both of them, but I'm looking for re-entries now. Psychology is everything. I caught myself over trading gold before understanding that I had to stop and see the bigger picture. Yeah, I'm telling you, psychology is huge. It's definitely something to not overlook, but many people do. And that's why it causes, consistent losses and never really becoming profitable.
Have to be able to balance your emotions, right? There's that constant force, right, of, fear and greed that you have to be able to balance out and control. And as human beings, it's obviously difficult to remove emotions from the equation when it has to do with money, right? Human beings are naturally emotional about their money and making money. And you have to remove that in order to actually make money consistently. Right?
Yep. Why do you not trade overall pullback? I'm not quite sure what you mean, Emmanuel. You could maybe elaborate on that. Maybe if you're talking about like higher time frame pullbacks, why don't I trade them? Well, if I'm not trading something, it's because there's no setup. So just because we're having an overall pullback doesn't mean that it's going to continue, if that makes sense. I mean, if there's a setup in that direction, then I'll trade it, right? But just because we're pulling back doesn't mean I have to be in the market at all time. I only look for my setups that meet my rules and stuff. Hopefully that helps. Let's see. Do you guys at some point in time want to stop time trading session for not wanting to disappoint your VIP customers?
Just talking about, I think when we announced last week, we would be pausing the live sessions for a while.
Oh yeah. I'm still going to be doing a little bit here and there for you guys, but I have to continue to work with my VIP members very carefully and very closely, which we've been doing. And I can't provide everyone who's not a part of my VIP all of my knowledge. I have to provide. I have to have respect for what I do and provide and bring to the table. So at some point I do have to step back for a little while, really pay attention to my VIP, which I have been. We have definitely been doing that, but I feel at some point these live sessions are just used for waiting for me to give you guys signals, which is not what I do. So that's why I'm taking a step back. I feel like I'm maybe providing too much information at times. And I have to just focus on providing that information and all that stuff for my VIP clients. So yeah, I will be taking a step back from these lives and from trading that as a whole in a little while. So, but hey, it doesn't have to change for you guys. I mean, if you're interested in learning this and learning from me and Aiden personally, and not just being a part of a group, being a part of a group is great and you will be, but being mentored by someone one-on-one is, you can't put a price on that. And that's something that we really enjoy doing, because it really helps us to understand what you're struggling with and how we can best help you to hit your overall goals. That's where we're, a little different from everyone else. So if that's something you're interested in doing, feel free to hop over to our website, book a free call with us, aerialfxtrading.com. We provide you our free trading plan and beginner's course just for signing up, even if you don't end up joining us. So we'd love to speak with you if you're interested in really becoming profitable and doing this as, potential career in the future. Let's see. I think that's it, guys. Well, I appreciate your time today. Thanks for hopping on. We will have our live session this Saturday. We will also have one next Wednesday and then that Saturday as well. And that will the last live session I'll do for a little while would be on the 15th. So we have a few more coming up. So be sure to stay tuned and have a great rest of your day. Take care, guys.
Really. Cheers.